Peter Marrone, Yamana Gold Executive Chairman. Now, Yamana has assets in Canada, Argentina, Chile, and Brazil. Goldfields is a Johannesburg-based miner and is currently in the process of a $7 billion takeover of the company. Peter, it's great to get your perspective. It didn't feel like it was a glowing recommendation for gold, like it could be worse, but you've been in this industry for quite a long time, and I'm wondering how you see the gold price evolving as real yields keep climbing and the dollar keeps climbing as well.
Alex, in this industry, you have to be optimistic. And so perhaps a bit of my optimism will come out, but it is underpinned by what I think is a sanguine view. If we look at gold today and say it's at a low point that we haven't seen since 2020, then we have to go back perhaps to 2015, 2016, and see what the gold price was, and then how did it compare to 2020, and how does it compare to today? It's very difficult to predict gold price over a short period of time, even over the course of months and quarters. But I think directionally, gold price continues to be strong and get stronger. I am not surprised that gold price is in the 1600s, that it has fallen from the levels that it was at. The US dollar has definitely shown strength and resilience. But equally, I think that directionally, gold price will find a base and then will start to establish upside again. And where I think that really resonates for me, and I'm sure that the World Gold Council sees it as well, is Asian buying. If we look at these levels, we begin to see that there's strong support coming from countries like India. China has been in COVID restrictions for a very long period of time. As they come out of those COVID restrictions, I think that buying begins to manifest itself, and we'll begin to see strong gold prices again.
Peter, good morning. It's Guy. Let's just talk about that Indian buyer. Rural India is having a very tough time of things at the moment. Gold purchases are going down as a result of that. Do you expect that to have a meaningful impact? And do you think that the average gold buyer, the person or institution that buys gold, is changing significantly at the moment?
Difficult for me to say, Guy. I'm not close enough in the way that the World Gold Council would be, although we are a member, to the movements and activities on what's underpinning buying in gold. But I would say that if we look at gold in US dollars, it is down to where it was a year ago and several months ago. But if we look at it relative to many other currencies, it's actually remaining very strong. And using that word again, I think it's demonstrating resilience. Mm-hmm. So I think all in all, it is, in some respects, David was saying something that I think I agree with, which is that it's doing what it's supposed to do. Not necessarily go up, not necessarily, if it goes down, it doesn't go down a lot, but it does better than the broader market and serves as an underpinning to it's a defensive asset during a time when there is macroeconomic, geopolitical, socioeconomic uncertainty.
Peter, specifically to Yamana, I mentioned that Goldfields is in the process of a takeover to really expand into the Americas. And as I mentioned earlier in the intro, you have assets in Canada, Argentina, Chile, and Brazil. How do you see the inflation picture evolving in each of these different regions? And does it kind of change what Yamana is going to do with each of these different regions?
Well, I'd say that whatever was the headline inflation issue several quarters ago, it has begun to dissipate. We've indicated that globally across all of our operations, and remember, Alex, taking into account inflation has to be seen as the one side of the coin to what happens with local currencies. And when 40 to 45% of our costs are labor and labor related, so in other words, contractors that serve many of the functions that labor serves, we have to be very sensitive to local currencies. So if I looked at it from the lens of that balance between what's happening with local currencies and also what's happening with inflation in country and then more globally, we're well within the tolerances that we indicated at the beginning of the year. We said at the beginning of the year that we would expect in the range of 3% as an upside risk to our costs, and that's what we're seeing.
Peter, cryptocurrencies, Bitcoin, being hit hard right now. They're being battered. If that continues, do you think that takes the people that are looking for something that is gold-like back to gold if they can't get that same thing in crypto?
Guy, I smile a little bit because it's a discussion that I had with a couple of my older children They are in that age bracket that believes that everything is digital. And so clearly they're looking at cryptocurrencies, crypto assets. And I'm a little bit more old school and I'm looking at things like gold. And so it seems that I've been able to persuade them that they should be looking at gold, and they've been able to persuade me that I should be looking at crypto assets. In the result, however, I think there are two fundamentally different asset classes. I've never believed that Bitcoin or the other cryptocurrencies, crypto assets more generally, I've never believed that it was a substitute for gold. It appeared that way for a period of time, but it's now demonstrating that that's not the case. Cryptocurrencies are behaving more like technology stocks than they are gold.